I don't know, but I think what we'll do is we'll just start and then Patrick can go and catch up. Oh wait, no, there you are. You're there?
Ivan. Yeah. How you
Oh,
going?
perfect. Good. I did a quick sound check. Turns out that half of the first part wasn't working. So that, anyway, we're in. I think GoTo is. I think a lot of people are running Webbies at the moment. With sort of everything going on. So yeah.
Yeah, I don't know what's going on. It worked from Tim's computer, didn't work for mine. Anyway, we're on. So apologies
We
for that
are
delay.
on.
Have we done a general advice disclaimer?
No, we have
All
not.
right.
So I'm ready for you to do it.
Okay, I don't have one in front of me, but we'll just go verbal. Any advice contained in this presentation is general only, doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns, and options are risky. If you don't know what you're doing, don't trade them. All right, so.
You couldn't have done it any better. It's almost like you've done that a couple of times.
Yeah, just once or twice. All right.
Once or twice.
So where do we start at the moment? I guess we'll go and have a look at the market. Off 166.
So it's interesting. So last week we were speaking about, and I was talking about how the potential vicious bounce to 6,000, and I wanted to wait for that to happen. So anyway, I think what was really funny about that is I ended up getting short on Friday, I think it was, as I saw the market coming off. You ended up waiting, and you did. So I was feeling pretty good over the weekend because I did my bear trade. Anyway, but you ended up getting about 100 points better. I think did you put it on yesterday? Your bear.
Yeah.
Your bear point?
Yeah.
Bear call, sorry. Yeah, good.
Yeah, I did try to get in on Thursday when we had the webcast, and the pricing was all right, but I was just a bit precious about it, and then didn't really manage my trade, so I didn't get filled, which wasn't a bad thing. I probably got slightly better pricing than what I would have got if I had got in last week. Yeah,
probably. Yeah.
But the interesting thing for me was I saw your order go into the market, and I'm like, you just spent that whole session trying to tell everyone the market was going to go up, and then you put on a bearish trade.
I actually didn't at all. Yeah, I love how you just attacked me for it. But actually what I said is that for me, the price action was very important. I was watching the price action. So that,
hang on. Someone has said no sounds. So I'm just going to do a quick sound check. Can anyone hear us?
Yeah, good. Perfect.
Okay, good. Yeah. All right. Thank you.
So I think it sounds like there's going to be there's just seriously there's some issues with GoTo. But anyway, so I was just talking about the price action, and then and actually interestingly enough on the Friday there was a fair bit of short selling covering going on in US, drove our market up on Monday. But where the reason why I got in on Friday was because it actually looked like the market started capitulating again. And that's where I went into a bear call. And that was the price action that I needed. It took the high, and then I ended up getting, I think the market was actually lower than it is now. But that was the price action that I was waiting for, just, bullish, and then give up. Now, I reckon that if the market was to go a little bit higher than where it did that day, maybe through that 5,300, if that was where it hit on Friday, I reckon that's where the stops would have happened. I think it's probably a fair bit staying above 5,500 because I remember that 5,500 number really well through the GFC. It was just kept coming back to it in the first part of it until obviously it's viewed through it. And then we looked at it, and when we were talking about that 5,500 level when it came through, and we were talking about doing our own condor, before the coronavirus was forced us to be in isolation. So yeah, I mean, it's interesting. So today's price action obviously is follow-on from last night. US capitulated yesterday. And again, this is the thing. This is where, today we were talking about this. It's interesting. Some people also can't hear still. So it's going to be dropping in and out, I think, for some. But it's interesting. So you were talking about potentially doing the second part of the Iron Condor. And I'm now of the view that I think that depending on how this goes, I think either I'll lose on my bearish trade, or actually you probably will get out anyway before I hold on, But I think the more likely scenario is that the way that this is trading, I don't think it's going to consolidate. I think it's going to start taking out the low. Timing is probably a different question. Like the question is whether it'll take out that low before the 16th of April when the XJO expires, or whether we're in for another move lower quickly. And as you know, the market can move very quickly in very quick succession. So, but once it takes out that low, and again, price action permitted, I think that's where I'd be interested to look at doing the second part of that trade. But I think. Which again, probably in light of how last week went, it probably would be like, it's going to go to 4,000 in the next couple of weeks, and then I'll end up getting bullish in a couple of 100 points.
Yeah, well, you can only trade what you see, right? So I don't know. I think I'm probably going to be more patient than I would normally be, and look at probably this kind of range being a range that we can stay in for a little bit. So if we get down towards 48, 49, I'll probably look at either closing the bear call if there's not much there, or leaving it there if I think it's likely to get through to. But I do think it's going to whip around, so I don't mind taking the bear call and a bull put for a period of time for now. That's probably the way I'll trade it.
I did actually start pricing it up to close my trade right on the open on Monday, and it was just literally just got distracted with other stuff. I mean, my trade is tiny. I mean, it's actually you put on like 5 lots or something. I put 2 on, and I had a thought to do something yesterday, but it just I can't say that it was on the top of my priority list. But just a tiny trade. I'd rather sit it out till the 16th, and probably especially once we get into that last week, 2 weeks with where the vol is. Hopefully we get another spike in vol, and I think there'll be some great opportunities right around that close. Again, like that iron condor we did for with a week to go, and it was paying good. Had a good payoff. I like that. But again, I think with where we're at, I agree with your view about general consolidation. It's like with where we've been, massive drop off, very news driven. Everyone's waiting for something. It can go, it can really whip around. Would be fine if the vol was just a bit higher. Yeah,
absolutely. I'm not sure. What's everyone else seeing out there at the moment? I mean, generally, what's the view? Do people think it's going to go up to sort of that 6,000 level, break down and continue to go for a run down, or are people expecting it to go sideways? So resistance 54 down for Stuart, less than, lower, consolidation sideways. Carl, he's in my camp, sideways or down. Brian, so that's kind of I'm sort of sideways, and we're at the top. We're at the higher end of the range, is my view. I think Adam's saying I think the shall be fairly steady for 3 weeks, then slight bump with a slow recovery. Interesting, good. Breakdown, but not much lower than we've been seeing it. Sideways from David. A lot of the funds managers that I've been speaking to think the market's going to go down when we go into reporting season, and that it's waiting. Like a lot of the buying that's been coming in has been coming in from not the normal quarters, right? So there's been more retail investors sort of buying into the market. So I don't know. That's the view of many in sort of on the funds management side. Those guys don't always get it right though. But they're kind of thinking that it might come off more. In fact, that probably means it's going to go up, right?
yeah, exactly. I was going to say, were they bullish in Feb?
yeah, that's right. A lot of people. I mean, the thing is though that when you're talking to funds managers, a lot of these guys are super bright and very insightful. With their mandate is their mandate. So
of course,
if their mandate is be long, they'll be long, right?
When I was working in my as a prop trader, one of these guys that used to I don't know if he's still there, but he used to be one of the heaviest, if not the heaviest, bond trader in Australia. And he was doing it through this prop company, but he'd never come in because, he'd just be, putting on his, it was like he was doing butterflies with futures, which is, was playing the yield curve. Anyway, and one day he came in and he goes, this freaking SPY, it's just, the only thing he ever did with the SPY is he'd look at these big levels, like 5,500 or 5,000 or whatever, and he'd just suddenly, he'd be the guy trying to take out all the stops. Anyway, and he goes, look, typically the way that a professional trader looks at this, he goes, have a look at the way that the market is most likely to fuck everyone in the market, and that's what it'll do. And so I think that, as we're looking at this, we're all talking, it's going to go up or it's going to go down. I think that if we're all sort of thinking that if, I think retail broadly is going to think, it's going to go down. But if it goes down, it won't be a lot. But I think that if it takes out those stops, I think you're going to get a lot of, the longer it consolidates, the more brutal that lock can be. But at the same time, a short sell squeeze could be extremely brutal. There's some serious short selling in the market at the moment. So yeah, I mean, it's interesting. Obviously, we were talking about that short selling last week. The broker that I have affiliations with, I found a short sell report and just asked a couple of day traders about how hard it's been to get a borrow from one of the big desks, and it's getting more difficult. Because not just because they want to do it, it's great business, and they're probably the only ones that are making a lot of money at the moment. But it's getting, the liquidity for the short is drying up, which means that everybody who ever have the capacity to get short is being short. So yeah, anyway, it's interesting.
Yeah. I was just going to bring up, I was just emailing Tim because I'm sitting on his computer because I had technology issues. Let me find where his email sits. A picture the other day, which I think is super relevant.
Yeah.
Take a look.
Oh, about the buying stock thing? How many people
wow,
have been searching buying?
Yeah.
Trudy.
Anyway, you keep going. Trudy's, Trudy, to this point, I'm about to bring up an image, but Trudy's just made the comment that everyone is asking her how to trade in the last couple of weeks. Yeah, that's the same, right? So, I've, and my personal friends, I don't bore them to talk about the market, but, and they don't generally ask me that many questions, except when it's something specific, newsworthy. But everyone has been calling, saying, is now the time to go and buy stock? How do I turn this image around? Anyway, I'll make you all look at it sideways because I don't know how to switch this up in an email. But that is the search term for how to buy stocks on Google, and you can see that massive spike. Yeah, there you go. So people are looking, but where will the smart money go?
Yeah.
That is the question. And anyway, Ivan, what else are we looking at? So just Ivan so we're looking at trading, say, a bear call at the moment. If your view is that it's going to range, and the range is somewhere between, there's probably quite a bit of support at 5,000 and the next level down is 4,800. How do you trade it? Do you set yourself up above the range and leg in and leg out in this market? Is that sort of how you would look at doing it? That's probably my plan of attack, is to say, oh, well, I want to set myself up above 5,300. Some people think it's 54, but I'm happy to be above 53 because even if it goes above it, I expect it to be below it within a 2-week period, and to probably set myself down at around 4,850, 4,800 on the put side.
I can't answer that question just because for me it's all about price action right now. I think that's the only thing that makes sense. Obviously the last couple of days, although volatile, has added some kind of, it's been logical. Sure, we're talking about 1,000-point swings here or there in the coming weeks, which obviously we haven't spoken to for a long time. But interestingly enough, I think that I can't answer that question just because I agree that at this point in time we're probably at the peak of it, which means that we could totally take out the high and go to that squeeze. I don't know. At the moment, the pressure is definitely to the path of least resistance to the downside, and it's going to take a long time for that to change. I think that interestingly, just to the point around what Rowan was saying around Santos. Well, I bought Santos not so long ago as a stock. And I bought it because of where oil is. Having said that, and I'm feeling really actually confident about Santos at the moment. I bought it, one of the 3 stocks that I bought into the super fund. One of the only reasons I did that is just because oil was trading so low. There's an article on CNBC last night saying that oil might go negative because there's a massive amount of stockpiling. But the reality is people just stop producing. I remember doing the same thing with natural gas. But what price did I get? I don't remember. I honestly don't. It was 3 weeks ago before I was diagnosed. Well, before I got tested with corona. So, I don't know. I think it's offside a little bit, or maybe up, but somewhere around here. I think it's just 370 or something. I think I got from memory. But anyway, but it's a self-managed super fund trade, so it's gonna sit there for probably for a year or two. I've actually not even checked what my mandate says. I share the self-managed super fund with my parents. Anyway, and so...
Question. Sorry. If you're still going, I didn't mean to interrupt.
As you know, I can go on for another couple
of
hours.
You're running out of steam.
No, never.
Right. Reporting season. We kick off when do we start? In May. So Brian, who did a fair bit of work around the long straddles, is going to be joining us next Tuesday night to talk about that. And I've asked him to get a list together of all stocks when they go into reporting, and we'll probably pull in that IV rank stuff into it as well, so we can have a look at it and look at some. That could be interesting. I mean, things could really heat up during a reporting season this time around. So if we can get into at the appropriate time, set up those trades, it could be a very interesting little period for us with some vol going and some price action as well.
I think reporting is going to be interesting. I mean, look, the counter argument to this is that it's half yearlies, and a lot of the projections. No one really knows what the real impact of the coronavirus is going to be to them, and I think that a lot of them are going to take I think traders and investors and funds and whatever have taken a pretty bearish view about the world's demise, and so I think that as a result people have pulled the sell trigger. So I think the real question is vol really going to spike if we're sitting at these levels? Because it starts getting to some pretty extreme values, like at 150+% vol for individual stocks. I mean, if you think about what that means, that's like, okay, well, the market, the stock could go, there's a 68% chance that it's going to go to zero. Like, okay, you know what I mean? Like, or below zero. Like, I think that while there's definitely going to be companies that are going to hurt and going to close down and whatever else, obviously Flight Centre's has been in a hold for a little while now, with last night the UBS and Macquarie Capital came in to try and raise money for them. But there is the interesting thing.
How did they go? I heard that the rumor was that Goldman's were doing a placement at $2.
At $2, yeah, that would not surprise me.
I have people out of Singapore contacting me, asking me if we knew anything about it, and we could get them an allocation. And I couldn't get a firm bid out of them, so I didn't try. But the $2, right? Really?
That's crazy.
I think
true.
Rumor. Yep.
Well, I mean, you got again for people that have been sitting in cash, and you and I know a lot of these people. Sorry, not a lot of these people, but we know a handful of these people that have been coming through this. There's a lot of people that have been sitting in cash. We've got my company's got a VC type
Actually, sorry,
lender.
sorry.
Okay.
Scratch my flight center comment, actually, by the way. I think I might have been referring to something else. Let's just scratch that.
Oh.
Sorry, keep going. I don't want to get that rumour out. I think I got the wrong company. Yeah. Let me just double check.
It's very much not like you. I wouldn't be surprised though. I mean, they did stop themselves from a complete free fall. There, I mean, it's the price of Flight Centre now somewhere between 0 and 10, right? They've effectively stood everyone down. They're in a lot of trouble. And the question is whether they can survive the next 6 months. But anyway, but there's a lot of people sitting in cash or have been sitting in cash, and for a lot of these people that missed out, I mean, this is one of those big criticisms that have always occurred from 2009 because it's been such a relentless, bullish, never-ending move higher. Yeah. People just gave up. They said, oh, well, there's a lot of money sitting on the sidelines, and it just continued sitting on the sidelines. And it was actually debt that fueled a lot of that. So when you look at the market 3 years ago, private debt surpassed the highs of October 2007 in US. And there was a direct correlation to the stock market because people just became, oh, well, it's never going to go down, so let's just buy it. Now we're sitting in a situation where a lot of smart people never invested in or didn't invest heavily in the market, and they're the ones that are now going to be taking advantages of some of these placements that are going to occur at super low values.
Yeah.
George Soros has been holding a short position on the S&P 500 for like 3 or 4 years, and it's just been getting shorter and shorter. And that man is terrible with timing, but he is never wrong.
Yeah.
Oh, he started getting really short when he started funding the protests, the Trump protests. So he started getting an inkling when Trump was going to come in, and he started getting short just before that. And he was accused and then later proved to be the guy funding the brawls. Remember, there was all these protests and brawls after Trump got elected, and he was waiting for a complete capitulation. Anyway, he got his capitulation a couple of years later, I guess.
Well, yeah. I mean, remember the market did after Trump got in.
Yeah, exactly.
It just ran hard, right? So
he
exactly
was holding
it
was bleeding so much. The disclosed position just in his fund was absolutely next level. It was like thousands of S&Ps, really heavily offside, massive options positions on top of that. Like, he was burning so much money, but he'll end up, he'll end up, just like always, just like the Bank of England debacle. That man is next level. And we all just continue talking about Warren Buffett.
Yeah. Buffett got better quotes. Okay, Brian, we'll get the list up in your session, and we'll start regarding reporting. But Brian's just commenting that it's just a few banks that are reporting in May. Cool. All right. But they will be interesting. And going back to stock screener. But looking at IV ranks, obviously they're coming off. For the conditions that we're in, you would think that that vol may be starting to look cheap in some instances.
I like how we can talk about Afterpay at 163% vol being a 78 IV rank. Actually, can you press one up? got to price up a Condor on an Afterpay. I think it's getting to the point where you got to click it. Go on, mate. You and you. What would be a webcast that we've had without me criticizing your IT skills? And after that, Trudy's asked us to do the same one for shits and giggles, which is CSL.
And what would be a webcast unless Trudy asked us to do something on CSL? All right, so 21 days, you're okay with that?
Yeah, let's do it. Nice and short. Get the most out of that ball.
What do you think? You happy with all of that?
I mean, look at it. It's $5. It's 25% move. That's a half a standard deviation. That's 1650, 2450, 1445, 2655 break evens. $205 max profit, 295. Like, you got to look at that and just say there's something there. Do you know what I mean?
Yeah.
Like, if you can get filled, that's it's just. I mean, what else pays you $2? You know, on a you might want to go up a bit more. It's like 25. There you go. There you go.
So that's 5% price increments. And yeah, wow.
Yeah.
And we actually, well, I can go further, can't I? I'll go 6%.
Yeah. There you go.
Override. Okay. Wow. There you go. That's an interesting trade. It's a very interesting trade, isn't it?
I'm tempted.
Yeah, same. Might have a go at that. And so CSL was the other.
I'd actually, but to be fair, I'd actually bring the legs in a little bit because I think that, you know, going 14.45, 26.50, like it's great. I think you go something like, sub 25, you know, 15, 25 types. And we're talking about a short-term move, and if it's going to start really moving in one direction, it's going to move anyway. So you might as well take the max loss on that. So I think a couple of grand on that is probably not a bad trade.
Yeah. Yeah, I might have a play with that as well. The CSL was the other one.
CSL, yeah, Trudy's favourite. I like how it's actually completely unclear what the chart's doing. It's just went to full zigzag. It's like CSL took about a biotech. It's keeping true to its sector. It's literally looking like one of those, you know, when your heartbeat jumps a lot.
Yeah, so it's at roughly $300, and you've got a bit of room either side. Yeah.
Yeah, I think so. So I think talking about, you know, if we look
I like
Afterpay versus, yeah, definitely, and yeah, 60-day range. I mean, look at that 240 open somewhere around about 250, went out to 240, up to 280. I mean, that's crazy movement. Whereas Afterpay is actually not moving. So there's like some real volatility in that. Whereas, yeah, Afterpay is obviously has a lot of volatility, but I don't know. I think it's this counter argument between, you know, they're going to benefit from people buying more stuff online versus, you know, and people being in issues with credit versus a general weakness in retail. So you actually think that maybe on some level there's it's not a bad deal, I think.
Yeah. All right. Well, Ivan, I think we'd probably call a session to a halt in a sec. If anyone's got any final questions, pop them in. I think I'm going to go and do that Afterpay Iron Condor and just have a little punt on it because the payout's so good and the odds, well, anyway, I just think it's an interesting one. Okay, so Sean said, if the sentiment is a room sideways, why would vol be cheap? Wouldn't we expect vol to settle down? I don't know that. I'm not sure. We don't really have we didn't get enough sort of feedback on what people's sentiment was. But Ivan, do you want to make a comment about volatility?
Yeah, I think that the comment that Patrick was making before is that volatility has come off a little bit from where it was not so long ago, which is why IVA ranks dropped off, because it's that 52-week range of implied volatility. But volatility is still through the roof. So I think that, if you want to go and line up a couple of trades at the moment and get some really good payoffs, go into the stock screen and sort of buy IVA rank, get some of the higher ones with high volatility, and you're going to get some really good results like that after pay. If we go sideways, then that's where an iron condor type strategy works. And if we get another major leg down, then ultimately you'll take a hit on the iron condors now. That'll be wiped, and then you'll be doing it again once the market settles down the second time. But the market never, or very rarely, does it go from having a massive correction to having a complete bounce back. Like there's always a period of consolidation in between, and that's where in all of our testing, that's where most of the iron condors really start popping up. And there's something in the formulas that we've put in which actually looks at a reduction and a direction away. So every day that volatility is picking up or the price is getting further away from moving averages, we actually wait for it to rebound before it comes back. So before it pops up with a trade idea. So we at some point in time we're going to get massive amounts of trade ideas coming through. They've already started coming through now. Heaps of gold ideas, as in the ranking as gold. Good time to be trading sideways and expecting vol to settle down, definitely, which is what we're doing.
Beautiful. All right.
Do you want to answer Mark's question before we take it to a halt?
What is the mean now for volatility? Volatility reverts to the mean. What is the mean now? That's a good question. It's probably
kind
looking over kind of here. But I mean, normally you don't have such severe moves in volatility, and that's probably finding that level is going to be, what we've got to try and do. And if we think that it's mispriced, they'll over the opportunity. So maybe with Afterpay, maybe there's that opportunity where we're saying it possibly isn't needing to be as high as this, but maybe it is. I don't know. Ivan?
Yeah, I agree.
Yeah. All right. I'll take that as you're not sure either. All right.
Who knows? It's just we'll find out in the next couple of weeks.
Yeah, we just need more time for that to play out. But look, I think if you're trying to trade it, I'd be thinking, well, Ivan is being expecting maybe that there will be a move down, but he's obviously going to watch it. I think my trading is going to be fairly short term. In most instances, we'll be pretty reactive as well. And where you might have put a trade on and waited for the time to come out of it, I'd probably be trading off a bit more of the delta at the moment. Yeah. Cool. All right, guys. Well, thank you for coming along. For those, we've invited a broader audience today. If anyone on the session hasn't got a trial of the platform, type in yes, and we'll sort you out on that front and give you access to all the stuff we're doing. We're doing the education session. There'll be some emails going out today around all of that, so we'll get that to everyone online today. And if we can do anything to help, please let us know. Good luck with your trading, and Ivan, I'll leave it with you. See you, mate.
Thanks, mate. See you later. Bye.